Lindsay, it's great to chat with you again. You heard the RBI. I bring that up ahead of you because I wanted to take a look at what we might be doing. Because remember, Europe was in a worse situation. They seem to be about a month ahead. China was kind of 2 months ahead. Europe was about a month ahead of us, particularly in Italy. What kinds of alternative or high frequency data are you looking at right now?
Well, it's interesting because if we take a cue from the Fed was actually generally optimistic about some of the data points that have improved from that low level at the start of the economic shutdown, looking at new home sales, looking at non-farm payrolls, looking at durable goods orders. We have seen improvement in this data, but more broadly speaking, the Fed remains very concerned about the longer-term trajectory of the economy, particularly as we await a 25-30% drop in second quarter GDP, or as they listed, the biggest risk to the economy is a second round resurgence of the virus. So a lot of unknowns here, which could lead to a second round of layoffs, really retarding any expectations of a material rebound in the second half of the year, or even moving into 2021. So right now, the data is very uneven. There are pockets of improvement, but we're still well below the levels that we saw at the start of the year prior to the pandemic.
But I guess, Lindsay, let me ask you this. I mean, is there anybody out there that doesn't believe there will be a second wave? I mean, at this point, I can't speak for you as an individual. For me personally, I just expect there will be. When it gets cold and the windows get closed again and everybody's back inside, you're going to retransmit it. Do you factor basically an automatic second wave into your models? I mean, I don't know who's thinking there won't be one.
Absolutely. And we did early on. The idea that this was going to be a simple solution, that we would be able to contain this virus in the near term, and the economy, once it reopened, would be a high-speed trajectory to the upside, we've really put that thesis to bed. At this point, we know it's going to be much more difficult to contain this virus, and we do expect a second round or even a third round wave of the virus to continue to keep the economy at bay. And so even if we do see a rebound in growth come the third quarter, it's very likely that the economy falls back into negative territory by the end of the year because of this resurgence, because of this potential second round of layoffs, keeping the economy in a very restricted capacity.
Yeah, I mean, we often forget that this is our fourth pandemic. Everybody refers to 1918, but we had one in 1957, another one in 1968. 57, they got a vaccine. 1968 actually killed a couple million people worldwide. We never talk about it. But the reason I bring these up, Lindsay, is that, pandemics, absent a vaccine, they're going to last about a year to 18 months. That's what history tells us going back, 400 or 500 years. Is that what we have to, and I'm not, we're both, neither of us is doctors or epidemiologists, although you're probably a PhD. Do we need to factor that kind of stuff in when thinking about stimulus and job creation, that this could be another 9 to 12 months?
Absolutely. And we keep focusing on a vaccine, but we also have to remember that even after the vaccine comes out, there will be some hesitancy among Americans to actually take that vaccine. Vaccines typically take an extended period of time, so rushing that to market, there may be some lingering questions or, again, hesitancy to actually accept that vaccine. So I do think that we're going to be talking about the pandemic, the impact of the pandemic on the economy for quite some time, well into 2021. And so again, when we talk about the rebound for the recovery, it's very unlikely that we see the pre-trend pace of growth established until 2022 or sometime beyond. So this is going to be a very long, very bumpy recovery, to say the least.